right, viewers, we have some fresh updates concerning the Chinese yuan that has surged to its strongest level since May 2023 after reports that Beijing has urged banks to limit their holdings of US Treasuries, adding to signs of a broader shift away from the dollar. Both the onshore and offshore yuan extended gains to multi-level highs, trading around 6.91 per dollar. The currency is now the third best performer in Asia since late September, up about 3%. Market sources say Chinese officials asked banks with a heavy exposure to US government debt to scale back their positions, though no targets or timelines were given. The guidance does not apply to China's state holdings of treasuries. The move is seen as reinforcing a global trend of diversifying away from dollar assets, potentially encouraging capital to flow back into Chinese markets and providing further support for the yuan. Analysts also point to dollar weakness amid uncertainty over US fiscal and trade policy under Donald Trump, as well as a more tolerant stance from the People's Bank of China toward a stronger currency, a shift that could signal a longer-term change in China's exchange rate strategy. Joining me now for this discussion is Collins Chong-Yu-Keat, Foreign Affairs Security and Strategy Analyst, joining us from Kuala Lumpur. Collins, thanks very much for joining us here. Firstly, news now coming in after we've already reported since a few weeks how Chinese economy has seen a resurgence. Now the yuan is also showing surging, doing rather well vis-a-vis the dollar. How much do you think China is now going to move ahead in reducing its dependence to the US dollar? And what is next now for the Chinese economy and the contributing factor for this surge of the yuan?
Yes, we have seen how this is not a currency story or surge alone. It's a power story. It's the narrative framing by China that is sending this signal that financial statecraft is part of its overall strategic toolkit. Of course, he is trying to send a very strong message also that he has the tools, the capacity to respond as a tit-for-tat move against this ongoing measures by the US in terms of restricting Chinese access to tech capacity, as well as different sanctions and tariff in place. And of course, also he has to be careful in this because he remains cautious that destabilizing the US Treasury could also prove to be a backfiring move for China itself. The yuan surge also reflects, of course, we have seen how this move to have this diversification in terms of strategic reserve, and of course also he has all these calculations in place, and we have seen how the impact of this surge in yuan in terms of the domestic market in China also, where a stronger yuan also helps in terms of the efforts to reduce imported inflation, as well as also to improve the sentiments of investment, the investors, and to stabilize or to control the capital outflow. And this has been ongoing for years now, and this is one of the moves also to ensure that it doesn't continue to hurt the Chinese economy and to improve sentiments for China overall. But of course, this is I see that from the framework of the strengthening narrative from China, that he has still the toolkit to coordinate this whole structure of the economic competition with the US, and but it's an attempt also to reshape the whole notion of capital allocation and to stem the tide of this unchecked capital outflow from China. That's the primary motive for now.
All right, Collins, thanks for your comments. They are requested to stay on as we now proceed. There's some news also concerning Chinese nationals in Australia. Now, 2 Chinese nationals have been charged with